Hi, I'm Michael Newrock, and welcome to the market analysis review for September 1, 2017, first day of spring or first day of autumn, depending on where you are, and happy Friday to you all. All right, let's get straight into it. If you have been watching, I hope you've been getting some value out of these videos. If you haven't been watching or have just started watching, then it's a good idea to tune in every day to get the continuity of what's happening in the markets, so you're not seeing it just as an isolated review, but more of an ongoing analysis of the markets, because the better you're in touch with the markets or in rhythm with the markets, the better you will go as a trader. So let's get straight into it. We're on gold, and 6 out of 6 high time frames are pointing up. Gold has been rallying for quite some time. I've been bullish on my stance on gold. I've been talking recently about getting in on trades at shorter time frames. So we were on the 4-hour before. On the 1 hour, there was a good catch of this trend, and I spoke about that, I believe, yesterday, and also the 30-minute, which also ended up catching some great trades. So if you did, let's have a look at the 15-minute as well. If you did catch any of these trades, then congratulations. So 15-minute as well. Any of those time frames would have caught good trades. 1 hour is a nice one. We can see here that it hasn't quite hit highs. You know, the indicators are telling me, the high time frames rather, are telling me that that this movement of price is still up. So back to the 4-hour. There's no real trade on the 4-hour. There is a new crossover occurring here, but the stochastic hasn't changed over. So the best opportunity here is to wait for a correction. If another correction occurs, say on the 1 hour or the 30-minute or even the 15-minute. So if we do get a movement down, you can see here MACD is still above the 0 line, and it's drifting nicely downward. RSI is above 50. That's what we want, what we need to see in a swing. So let's say hypothetically it comes down to about here, and then swings up to, you know, around where it is currently. The stop will be very small, just underneath that slow-moving average of around 350 odd pips, and the most recent high, there's over 400 pips, and if we look here, about 700 pips. So, and there could be an opportunity to break this high, because if we look at it on a more macro level, say with the daily, we can see, you know, this has been moving upward for considerable time, since early July. And if we look at it on the weekly, it gives us just that new perspective, that other perspective that you don't see when you're locked in on even the 4-hour. So on this basis, there's, you know, 5,500 pips in it for a high of $1,375 thereabouts on the gold price. It's currently sitting at 1,319. I think it's got plenty of room to move still. I mean, just very briefly, if you look at Bitcoin, which was about, what, $18 just about 2 years ago, and sitting currently at 4,733 US dollars. We're not talking Zimbabwean dollars. We're talking US dollars per Bitcoin. Well, we'll talk about that another time. But what I'm getting at is that there very well may be more room for growth and rising of price in gold. So 1 hour possibly, or shorter currently. Euro has changed to bidirectional. We've seen some good price moves up. If you caught those, congratulations. There's been a big move down. If you look at the high here, right down to its low, it's been about 250 pips. And the trend alert occurred at this crossover, which was already about 190 pips into it. So the move itself wasn't very big as far as in relative to the moving average crossover, but from its high, it really was. So if this Swings down, MACD is below the 0 line, RSI is below the 50 line. That's what you need. If we get a swing down and MACD changes to red, then that may be a okay trade. However, there's still a fairly big stop. Let's say it closed here. Say the slow moving average, the gray moving average is around 60 pips. Well, that's not too bad considering you've got just under that. It would be better for your most recent reference point, whether it's a high or in this case a low, to be at least what your stop is. But there is still, a lot of room to the downside. It has been bullish on the other hand, and I've been bullish about the euro. So if it does curl back up, then all bets are off for a short trade, and we could be looking at another opportunity for a long trade, and could be even now because it is bidirectional. So once again, to get a bit more clarity on the more micro level, we'll look at the shorter time frame. So in a 1 hour, if it falls below, MACD falls below the 0 line, then all bets are off for an upward swing, and it may be moving back to a downward trend. But right now, that still may eventuate. If there's a swing to the upside, this would be a nice swing. Let's say it's swung to here, and the MACD changed to green. It's only about 25 pips, and it's near that high. So if it busts through that, then there's about 150 pips. So that's the reward that I would like to see. And euro has still been very bullish overall. To verify that, you only have to go, say, to the daily charts and look at that. It's just been going up and up and up. So even though it could go short if price drops now, there's a lot of money on this pair going up because of how long it's been going up for, quite steadily, I might add, as well. So if we look at the weekly, we can see that. Look at the sharpness of that over since February this year. So with that in play, then I would want to make sure that you have low risk if you're taking short trades, because the big money for a long time has been on long trades. Therefore, possibly look at, say, a shorter time frame as we did before, maybe a 1 hour. I won't look any further because we're not going to find it on a 15-minute or a 30-minute just now. Well, we might find a swing. Let's have a quick look. The reason I say that is there's been a bit of a fall. So yeah, no, there's no trade there, except for maybe a possible trend trade. And same with the 15-minute. If you don't want to catch a swing on the 1 hour, then maybe a trend trade on the 15-minute. But when you look at it like that, there's still, I think, some room to fall before any possible movement back up. Okay, so pound has been fluctuating between a bidirectional market and a downward. It's still under pressure compared to the euro, as it has been over the course of the video series that I've been running for the last 2 weeks. It has really been running into some consolidation here, so it's not the easiest of trade to decide to go for. It's always good to go for the easier trades because they tend to provide the best chances of success. So there's nothing here on a 1 hour in that bidirectional market. If it swings up, then actually that would make it a bidirectional, just because the 4 hour, well, actually this is on a 1 hour, so no. It's a tough one. I would probably let the market just work itself out, and then once there's a clearer indication, say, for example, if it does start moving up and then we get a crossover here, then that's going to be a perfectly valid 4 hour upward trend trade, and there's a bit more stability in it that way as well. I mean, if it breaks through this resistance here, 29.77 thereabouts, then there's a lot of open space here. There's a high of 280. So I think if the euro continues to strengthen, it's going to pull up the pound as well. But on the flip side, if the euro rallies strong, then it could actually lift the euro pound with it as well, which has been going up, and that's putting pressure on the opposite side of the trade, the pound Swiss, and as a result, the pound. So keep open to both directions. I always say I'm only loyal to the market, and I think that's a good mindset policy to have. Don't get too caught up in which way it should be going, but rather which way the trend Profiteer system is suggesting. Having said that, always go to your daily and your weekly time frames for more of a sense of what's happening in the macro world. Okay, so then as we saw on the euro and the pound, particularly, it's been rallying for quite some time, particularly on the euro. All right, so Aussie. Aussie's been a really messy trade. You know, it's been going up and down. I said yesterday that it was a more of a difficult one to look at. So it's changed to an upward trend on 4 out of 6, but it has been very messy. So it's one that I'm kind of leaving alone at the moment. The Kiwi, on the other hand, has been a bit more reliable in its direction. I'll just go back to the Aussie for one moment. If we shift on the Aussie to the daily time frame, we can see here that it's been, quite bullish. Now, compare that with the Kiwi daily time frame, and it's clearly in a downward trend. So Aussie, Kiwi. So as a result, the Aussie Kiwi has been going only one direction. Kiwi's been under more pressure. If you're going to get into a cross with the Kiwi, then the Kiwi would more than likely be the weaker of the pair. It's been under a lot of pressure. So pick a strong currency to match against it for going long, as we have with the Euro Kiwi and Pound Kiwi. Same too applies with the Aussie. It's been depressed compared to the Euro and Pound. And that's why the Euro Aussie and the Pound Aussie have been taking off. If you haven't seen them, it might even be worthwhile to go back a few videos and again just to get the story to date, because the thing is with trading, when you are basing your trades and your positions on those higher time frames, they don't change very often, as you can see with the just going back here to say the euro daily. It's been very strong on the daily and on the weekly. So you don't wake up one morning necessarily and say, I think it's going to go down, because it's been going up for so long, and the daily and the weeklies are giving us strong graphical representations, mathematical representations there of the facts. So that's why I like technical trading, because you're deciphering, you're translating what the market is telling you in terms of price over time. All right, so dollar CAD. Wow. Okay, so it's been going down for quite some time. It's actually had some nice moves, upward very reliably, then downward very reliably. And this trade was a really good one. I know quite a few of you caught this, and it was around, a peak of about 155. But at this stage, it was 4 out of 6. I'm pretty sure upward high time frames. So this surprised me as much as anyone. But this is also, and I posted this in the chat today. Expect for the best, but plan for the worst. In other words, lock in your pips. And so in this case, if you locked in pips, I'm sure that you would have done well on a high of 155 pips from start of the trend to the peak. Obviously, if you're new to Trend Profiteer, ignore these because they're just way too far from the origination of the trend. I just have them displayed so I catch everything. Yeah, back to current time, it's now going into a full downward trend trade, possibly. Really, really big move. So just like the euro that had that big move and then bounced back up, there could be a bounce on this. So it's no good to chase trades when they're really big moves from top to bottom, about 210 pips. So if you were going to short or attempt to sell the dollar CAD, then probably best to wait for a swing. So wait for the MACD to pop closer up to the zero line and then wait for a swing down. Also because it's so close to the bottom of the chart, but also the recent lows. Now, if we look at the daily, you can see how depressed the dollar CAD has been over all this time. Really, the story this year should have been of a strong dollar. That's how it was being ramped up last year from the Fed. But they've continued to, through various reasons, not really have any policy on rates, and it seems as though they may be sitting on their hands for some time yet. Now, this is really significant. I bring us to the weekly chart. Take a look at this. So this white bar was actually the pivot low, but this was the low that was directly related to that pivot low. The difference, just very quickly, a pivot low is when the close on the bar of each side is above the close of this bar. Which is why this one isn't the pivot low, because its close is up here. But anyway, this low is significant, and you can see it did crash through and close, pop right back up, and then it's come straight back down to challenge it again. So this is kind of one of those pivotal moments. And if you are looking at the dollar CAD, then it's good to have this in perspective. So again, on the daily, very depressed, and unless something dramatic happens, under pressure. And on the weekly, also, really at that crossroads of which way is it going to go. If it breaks lower, then the low is around 500 pips. Well, it's even a lot further, but on the visible history here. So be careful on the dollar CAD. It could be, just back to the 4-hour, it could roller coaster, just consolidate and get tighter and tighter into a triangle formation, and then eventually break one way or the other. But here, I'm not really interested in selling, because it's right there at that support level. So let's look for easier opportunities. And that comes to the dollar Swiss. Dollar Swiss has moved sharply up in reverse correlation to the euro, and has since corrected. Now it is looking at a nice possible swing. These are the swings that I like to take. They're, in some cases, well, like this, pretty much actually even better, or depends on how it eventually closes, but around where the original trend trade was. So it's corrected, and if we get a swing over the next bar or two, of course that has to be above the zero line and change to green after consecutive red histogram bars. So we've got a nice point of reference here. Let's just do a quick hypothetical. If it's around here in a couple of bars time, and it pops up to say 96.10, and there's about 30-40 pips on your stop, and about 60, close to 70 pips on the high, the most recent high, which is the reference point for a lot of traders. They're just looking at it on the chart, and they're thinking, well, there you go, the sell for the dollar CAD's come in. Just flick back over there, and as you can see, a technical setup, but it's not one that I want to take, because of the reasons that I went over before. Nevertheless, sell trend trade to the downside on a depressed dollar CAD. So dollar Swiss, the opposite. It could be moving up, and especially watch for the euro. If the euro is going down, then the dollar CAD is more than likely, in most cases, going up because of that reverse correlation. So bidirectional currently, a swing up would mean the 4-hour swing will change to green. That'll be 4 out of 6. That's good enough for a conservative green arrow here to the upside, and nice risk reward. I like this trade. If it eventuates, then it could be a nice setup, decent risk reward with the potential of even higher. And yeah, I think that's pretty good. So again, you can look if you see movement and you don't want to wait for a swing on the 4-hour, then look for the shorter time frame. So don't know if we'll get one because there hasn't been a great movement here, but no, on the 1-hour. On the 30, it's way too flat, right? And on the 15, way too flat. So I'm not interested in any of those, even if they gave off alerts. So pop us back on the 4-hour. And that's, that's the most reliable. And it sounds like, 4-hour trading, it must be kind of boring, but it's not. There are trade setups, opportunities happening all the time. On 20 odd currency pairs, give or take, and you can trade anything. And between trends and the swings, goodness, there are a lot of trade opportunities. So I'm not saying only the 4-hour, as we've gone over previously, that the shorter time frames are great for those precision entry points, and but especially when you've got, the other part of your mind thinking about where the trade is positioned on the 4-hour. So, yeah. And it's great to see, just on a related topic, that, the members that have been going well and getting, in terms of getting really decent sized pips, 60 pips, 80 pips, 100, 200 pips, and, never had it before. So when you get those big trades, that really takes a lot of pressure as well off your win ratio too. You can afford to have also some more speculative trades that you take. So there's a lot of benefits, obviously, to winning. So dollar yen, similar to the dollar Swiss, a swing to the upside will see possible movement upward. And let's say, again, playing hypothetics, if it consolidated or meandered along here, swung up to around here, it'd probably be around 30 pips on your stop, 50 odd pips, 55 almost to say 50 to the recent high, the closest reference point, and then about 80 pips on your high here, and even higher. So next up we have Euro Yen, been going really well as well. I don't like the look of this trend trade occurring here. If it is a valid one, it's very, very slight. It'd have to be a really big move, preferably take out that parabolic SAR as well. But you can see here on the MACD how slight it is. It's good as well when the stochastic has just more recently crossed over and is a bit more sharper. So that's flat too, as is this. But just looking at the price as well. So I would tend to be more interested in long trades on the euro yen, as for most of the yen crosses. And again, you can see over the daily, it's been going up for quite some time, and on the weekly, also for quite some time, other than this correction here. So right now, not necessarily a good time to get in on the action. This one was a great time to get in on it. This one was getting a bit too far, but yet it still did really well. This one's just way too far, way too high to the top of the chart, which is essentially giving us the reference point for the top of the move. 1 hour, that's a messy kind of chart as well. I'm just looking for opportunities here on the shorter time frame. Well, look, if I was looking at a long trade on the euro yen, then the 15-minute seems like a fairly decent opportunity. If it, fades out here and curls back up and forms a new trend trade, then that could be good because, we've got a small risk, 15, 20 pips. We've got 20 pips to this high. We've got 60 pips to this high, all on a 15-minute trade. And at the same time, we're thinking of it as a 4-hour because, if there's a movement from current price, there's about 80 odd pips. So once you get in on it on a decent 15-minute trend trade, there may be more, there may be less, just depending on how low it goes. So I'd be letting this fade out and then look for an opportunity. Check on those shorter time frames. Okay, pound yen has been making its way up, not as strong as the euro, but still a reasonable opportunity and still plenty of room to the upside. If it crosses over, then all bets are off. It could just as easily fall, and you can see it is bidirectional. So let's have a look at a 1 hour. This is a bit of a different story to the euro yen or even the dollar yen, and see here we can, just the price is telling us alone that there's downward movement at this time. Yeah, so again, if you're going to look at here's a trend trade that's just about to occur. If the trend follower changes to red, stochastic is looking a lot nicer than that last one we had a look at. MACD is already below the 0 line. RSI is below the 50, and it's looking nice and decent, consistent angle. So that could be a nice, at the very least, scalp to the downside. And who knows? It might bust right through this support at 50 pips and head on down to this low at 140 pips, and that's on a 30-minute trade. So as to the overall direction, though, we still have the 4-hour trend trade in play. So until that changes, then I'm overall looking more at long trades. So if it does go down, as I was saying, maybe look at it as a short term. Keep your mind open for a change in direction, because on the 4-hour we're still looking upward, and it may at the very least get pulled along by the other yen crosses also going up. Of course, if there's terrible news on the pound, then that's going to put pressure on the pound, and so it wouldn't be the yen cross to necessarily go long. It might be a good short. So Aussie yen, stronger Aussie on this correction, and the Aussie yen is benefiting from that. So it looks a bit kind of messy though, and we've already had a couple of swings here, and they just haven't really played out too well. So again, like I was saying before about the Aussie, it's a tricky call at the moment. Not a lot of movement in this Kiwi yen, so I'm undecided on this one as well. It could easily change over and go to bidirectional, but at the moment it's certainly looking strong as a short, and has been for quite some time on the Kiwi. So, as I mentioned before, the Kiwi has been under a lot of pressure, so we're getting a bit of a different yen cross to the other ones that we looked at. Okay, just moving on. CAD yen, also strong. No trade here though, unless you wait for it to correct and then look for a swing or a trend on a shorter time frame. Same with the Swiss yen, although this one is looking better for a possible opportunity. It's been moving strongly up, just like the euro yen, and so you could wait for a 4-hour, but it's looking very flat for its entry for a 4-hour trend trade. 4 out of 6 higher time frames are pointing up, but let's look at it on the 1 hour. It's still, if it pushes up right now, it could actually make it as a swing trade, but I'm not sure if it will, if there's enough movement in the market at the moment. So there's nothing on a shorter time frame at the moment, but there may be in the future, looking at it on a shorter time frame to get in on a long. Euro Aussie, still strong, 4 out of 6. Correction, just like with the euro. So if we see a collapse in the Aussie, that would be good for this trade, especially if the euro was at least still supported, if not going strong. Even if it's falling, if the Aussie is falling a lot quicker than the Euro, then the Euro Aussie will continue to benefit and maybe resume its upward move. So no point really looking at a shorter time frame right now, but you know, you can look at shorter time frames for possible trend trades to the upside. Right now, it's in consolidation, which is why I won't look at the shorter time frames, and I'm running out of time again. So Euro, excuse me, Euro Aussie. It's been really messy, not one that I'm really keen to revisit just yet. Euro Kiwi's been going really strong, and if you were looking at that, you need to get into a really short time frame, like say the 15-minute. Okay, so this 15-minute is not a good-looking trend trade, and there's been a lot of consolidation throughout. They've all not gone anywhere, and it's flat. You know, there wasn't a big move to the downside with a nice bell shape move of the moving average. It's flat, so I wouldn't look at it. But that is typically what you would do when you want to get in on a trade that has already moved a heck of a lot. Otherwise, wait. There very well may be a correction. Being Friday as well, there may not be. Don't rush into trades because, you know, the weekend's coming up, and that's another story. Whether you hold your trade for over the weekend or not can work for you, but it can work, you know, badly against you as well with the market gaps occurring on Monday morning potentially in big shifts in price. So if you are going to take trades today, then maybe the shorter time frames overall is going to be a good policy. All right, so pound Kiwi also very, very high, but there may be more opportunity here because we got this flashing lighthouse of a beacon saying, you know, this is the recent high. It's almost a challenge at 180.78. That's 55 pips, and I know a lot of traders would love to get another 50 odd pips. So let's have a look at it on the no, nothing there on the 1 hour. Let's just drop right down to the 15-minute. And nothing at the moment. But you know, if it drops back down, that would be a good thing, and then curls back up, new trend trade with a bit of downward movement before the trend occurs, and you know, that could be a good opportunity. So watch that. And Aussie CAD, Kiwi CAD, Euro CAD, and Pound CAD have all been under a lot of pressure. That's probably the only one that I'd be looking at right now. If we had a real weakness in the pound, then the Pound CAD may drop. Of course, you would the other side of the coin is seeing strength in the Canadian. So 100 pips to the downside. Hang on, that's sorry, 99, about 100 pips for your stop, and okay, so it is about 1-to-1. So under a lot of pressure, it could be a good trade. Not really ones, the cat crosses, that I've been interested in currently. So with that, I will finish up. See you in the chat room. Till then, good trading, live well, and I'll see you soon.